Well, g'day there traders and friends. Thanks a lot for joining me on this Monday afternoon market recap. This is going to be a continuation video off from the video I released last week, and I'm going to begin with that of the Russell 2000. I will say from the outset that this probably won't be the longest of videos. It is going to be a recap of what the markets are doing and what essentially we are looking for as we move closer to confirmation. Confirmation is, relatively speaking, a funny word. It may seem as though the markets have already confirmed to the downward direction. Unfortunately, however, that is not true even to the upside. We still remain rather bifurcated, and these markets are still rather confused. Confused as in they do not really have a true directional underpinning at the moment, even though the odds of a continued retracement are somewhat still increasing even during Monday's session. Now, this is the Russell 2000. You can see we've been talking about this primary and intermediate bullish trend line that did break. This broke last week. And again, you can see, relatively speaking, the bottom sort of fall out of this market. We are getting very close to old macro support down here at 1,608. That is our target on this. We're trading at 1,629. So we have about 20 points to go until we do hit that of a material floor. Interestingly enough, on Friday last week, and of course during today's session, we do have two lower wicks on the Russell 2000. Now, we've been using this to an extent as a leading indicator. We've been looking at the Russell 2000 and also the NASDAQ. The NASDAQ soon after followed suit. You can see break below 7,849 and 50 points here, or 0.5 on the index. It has fallen not only on Wednesday, but you can see here, Thursday, Friday, and a little bit further today. We do have that of a high wave spinning top on Monday, a little bit of a sort of an indecisive candlestick. I've seen this happen a lot where you can see these markets come on back up and retest some of these old critical areas of support that were once resistance back in the period of July. That would make a lot of sense, but at the same time, we've also spoken about that hypothetical in the chart setup that would be under construction with the Dow Jones Industrial Average. And this is where I'm going to take the analysis maybe one step a little further as to what a lot of people are speaking about at the moment. Now, obviously with the Russell 2000 and the NASDAQ, it has been under material weakness. So has a lot of obviously the FANG stocks and just technology as a whole. I think we can all agree there. The problem at the moment though is that with the Dow Jones Industrial Average and the S&P 500 is that we still haven't really confirmed that of what the Russell and the NASDAQ have already done. And that is, of course, breaking the intermediate and also to a larger extent, potentially that primary rising bullish trend line. You can see on the S&P 500, where are we in context of this rising line? Just here, we're still on the upside of that. So what that means is that this is still technically a healthy correction. Now, with the S&P 500, we're coming back into the support area. Now, as I just said on the NASDAQ with that high wave sort of spinning top candlestick, it does open up the doorway for potentially a little bit of a bounce in the equity markets. Again, I am going to point out that you don't want to trade these markets long until we have market uniformity breaking above the swing highs that we've priced in the month of September. Now, that is across the board for the S&P 500, the Dow, and the NASDAQ. But what I can see happening to an extent, which does work in conjunction with the NASDAQ, is to see a little bit of a bounce off from this support area that may take us on up to essentially where we were towards the back end of August just here. So somewhere just shy of 2,920 points, it looks like. And then to create something like this that would give us that critical retest, that were at least the potential break of that same trend line towards the end of October. That's doorway. Essentially, number one, we could always just break down below this level right now. But if we did see what is a little bit creative at this moment, this potential right shoulder, it would set up that of a head and shoulders pattern, which would make a lot of sense if we did see the technical break of this rising bullish trend line. So that's something to think about. I'm not really eyeing that off all that aggressively at the moment, but it is certainly something that may be under construction. What is most important, again, is to see these markets just move into synchronicity with one another. It doesn't really bother us which direction that is, whether or not it is bullish or bearish, but at the moment and as it stands, we're still not seeing confirmation between these markets. This is the Dow Jones Industrial Average. We've had this tentative sort of entry here at 26,203. We got very close to it today as at Monday's session. However, one, we didn't push below it. Two, we didn't close below it. And three, we haven't continued below it. So you can see we have this lower wick once again. And it does open the doorway for potentially a little bit of a bounce, very similar to what I just explained to you on the S&P 500, that may take us on up above 26,750, or just below it, I should say. And then that may open up the door again, very similar to the S&P 500, to a larger sort of correction that may take us all the way back down to roughly 25,000 to 25,500 points on the Dow Jones Industrial Average. So as it stands on Monday, that's going to be essentially the market recap. If you want more in-depth analysis, I'd encourage you to have a look into that pro analysis class, which is posted up on the website. And again, if you are a little bit trade light at the moment, it is a good thing. You don't want to be jumping into a bunch of positions or really aggressive positions, I should say, at this particular point, because again, until these markets confirm, you're not going to see the major sort of continuational types of movements. What is interesting, however, is that the ADX and the CCI, or at least the CCIs, have been breaking down out of that positive 100 reading, whereas the ADXs have been turning up quite aggressively as well across the board on these market indices. One stock I just wanted to speak about very quickly was that of Tesla. Today we were down $11.39. We spoke about this over the weekend. Again in pro, we have this hard entry here at 257.60. I think there's a very high probability that this is just going to crater. So if you're positioned into this at the moment, you've already made roughly $7, $7.10 from that entry price at 257.60. We're closing down at 250.56. So that's a pretty decent move in one day, but we're not really eyeing off those one-day movements. We're potentially looking at a major sort of sell-off that may take us all the way back down to $203 per share for the stock of Tesla. So pay attention to this. I think if these markets do collectively move to the downside, or at least exhibit a little bit of weakness, Tesla's going to be at the forefront of that bearish move, and it's quite good to have an actual sort of bearish position in this already if you've chosen to do so, because that did trigger today. And sitting pretty on that individual trade there. That's the only individual trade that I will speak about. It's more so the market analysis and what's going to happen towards, or as we move into, again, the second week of trade in the month of October. All right, so that's going to do us. If you have any questions, email me. Other than that, I'll be back with you most likely tomorrow for another market recap. All the best, everyone. James signing off on behalf of Pivot Point Trading. Farewell.